All right. Good afternoon, everybody. Isaac Bursch, grain manager here at FCS. I have PJ Frederick on here, StoneX, one of our risk management consultants. Wanted to cover the June stocks and acres report we saw today. Um, PJ, welcome aboard.
Thank you,
Um,
Isaac. Good to be here.
yeah, tremendous amount of volatility today, both corn and beans. You could say it was a blowout in each of them, but in a different direction. We had SEP and D's corn down 34, 35 cents, and we had August to November beans up 74 to 78 cents. At one point, it was higher in the 80s. Beans are now about 87 cents off their lows in the Nove, and corn is down about a buck 35 off its highs in the D's. So, definitely a roller coaster trade. And I don't know that there's going to be many times, I guess, in my experience that I've seen a dollar spread in price action in both corn and beans on any given day.
Yeah, that
uh,
certainly goes to speak what a surprise this was here today, Isaac. And I do think that again, you have D's corn down 33 and three quarter, Nove beans up. Yeah, it's really a surprising price move here today, and that goes to show what a surprise today's report was. We look at acreage first, which I believe was the major price mover. We are looking at corn June acreage number. So these were surveys here put out over the last few weeks. 94.096 million acres for total U.S. national acreage versus 92 million acres in the March planting intentions. Also want to take a look at the soybean number, which is the second here at 83.5 million acres, which is 4+ million acres off the average trade guess and well below the March planting intentions number, which is shown here on the far right. So a dramatic drop in soybean acres here, lowering production, and really a surprise here to the trade today, while we see the corn balance sheet continue to loosen up on increased production. Looking first at corn acreage intentions versus prior, we're looking at this 2 million acre increase from March to June planting intentions. This is one of the biggest surprises March to June that we've seen in the last 10 years, with the obvious outlier being the 97 to 92 million acre revision lower in the 2020 March to June acreage situation. That was kind of a time frame, Isaac. Honestly, I had very little faith in applying economics to the acreage planting, the planted acre numbers, because we were at, futures prices back then in the $3 range, and we printed a 97 million acre number that year for March intention. So this year we went from 92 to 94. If we look state to state on where those acreage changes occurred, you are looking at a major, really across the board increase in the Iowa, Illinois area. Some of these Illinois areas that have been planted at this point, are undergoing some drought and even some derecho type derecho situation in some areas yesterday with some wind damage. But corn remains king as we look through the major areas of the heartland there. And, significant one significant thing here is Indiana, Ohio, relatively unchanged versus our March planting intentions number. So Dakota's net up 450,000 acres of corn from March to current as well. Decent planting window. The grower's going to plant corn.
yeah, and I think that's maybe the biggest surprise is that we saw increases in South Dakota, North Dakota. If you said that on, you know, May 20th that we were actually going to be close to 500,000 acres higher, everybody would have called you crazy. But things did dry out in a hurry, and I guess the numbers show that they got it in. So, but I mean, overall, nobody was expecting the other 1.5 million acres to come into it. Everybody was still, 92 is, be happy with what you get. But here we are sitting with 94. So,
Indeed. So we look over at soybean intentions versus the June acreage report. You see a 4 million acre revision lower in that number, which is just slightly behind the revision we saw back in 2019. And this is, again, one of the major surprises we've seen over the last, this ranks second from March to June, clear back to from 2000 to now. So this is really probably the major surprise and the reason we see a 70-cent price move here today. You look state to state and you really can't pick out an area that wasn't dramatically affected, although the South Dakota number does remain unchanged despite a 900,000 acre revision in the North Dakota soybean acreage. So you look up in that North Dakota area, we're going to rely on them for more beans than we do corn any given year. And you see them definitely preferring corn this year. One other thing I'd like to mention is we did see an increase in hay. We up that direction for what that's worth. You also saw an increase of 400,000 spring wheat acres in North Dakota. So maybe that's beans went into spring wheat. There's maybe something to be said for input pricing and the timing of nitrogen fertilizers put on up that way. But most of that was, again, put on relatively late in May. And, I guess if you only have a certain amount of time to plant it, you plant the corn in this case. I am not mentioning in this situation the spring crop insurance values, $591 for corn and $1376 for beans, that no doubt would play into a crop insurance revenue protection plan.
It's probably going to have an outsized effect up in the northern states too, North Dakota in particular, if you're shooting for guarantees, right?
Indeed. We look at total corn and soybean planted acres, down 7.3% in North Dakota, whereas you see lower corn and soybean planted acre numbers just slightly throughout the heart of the Corn Belt. The U.S. total corn and soybean, the sum of those two is 177.6, which is down about 2 million acres from a year prior. Again, I'm pointing at things like 1.3 increase in hay, some wheat increases, and then I think you saw a move to maybe some more specialty crops, as odd as maybe that sounds, but kind of a where did it go at this point. Prevent plant would also play in there in the Dakotas as well. Principal crop acreage relatively unchanged, but you saw a drop in principal crop acres through the eastern Corn Belt, central and eastern Corn Belt here. So that is worth noting as we look at the data here today as well. As you look at March to June principal crop acreage change, this chart's brought to us by the USDA. A 2.1 million acre increase in the corn acreage, and I've mentioned hay here a few times, and it's kind of where did that come from? But that's going to be something to be said for herd size here a little bit, and maybe availability of some of that down in the southern plains as well. You look at the major outlier here at the bottom being beans, dropping 4 million acres in the principal crop side. So I believe acreage was largely the culprit as we look at price move here today. Take a quick look at June 1 stocks, and these are stocks as of June 1. So keep in mind this most recent price movement that we've seen in futures is not going to be reflected in these values. So a movement from on-farm stocks to off-farm here in the last few weeks is not going to be included in these surveys. As we look at the 4.1 billion bushels of national corn stocks, that is 1.5 billion bushels lower than the average trade gas. Over on beans, 0.8 billion bushels or 800 million bushels, which is slightly lower than the average trade gas. And both of these are well below last year. Where did these look at these stocks changes in corn? We're looking across major corn growing areas here, and you show 25 million bushel lower June 1 stocks in Iowa than we had a year ago. We have lower stocks by 50 million bushels in Illinois, and a lot of this Illinois corn did leave to go to areas of the Southwest Plains directly following harvest. And you'll notice that obviously this Nebraska, Kansas crop last year was not what we wanted it, not what they would expect. Subtrend yields for sure, major droughty area, and therefore we see a lower stocks all in all. The scale on this is going to be sorted by total stock size, so that's why I just reference the legend as we look at the color scale in that one. Jump over to bean stocks here. 68 million fewer soybean bushels here in Iowa versus last year, with 140 million bushels being the reported number for Iowa. You see lower soybean stocks just barely up here in the Dakotas versus a year ago. And then obviously production issues on dryland and even the irrigated areas of Nebraska last year is going to lead to a lower stocks number there. So profitable crush conditions earlier this year did eat a lot of beans throughout Iowa, Illinois, for sure. And obviously the export system is going to be relatively front loaded in the marketing year, but I believe that no real major surprises here. You look at on-farm versus off-farm, and you have fewer beans on-farm than you did a year ago. I'm not including that chart in here, but there's a question amongst the commercial base how many soybean bushels are out there on farm, and I think that there were certainly some that moved here today. So something to keep in mind here as we look at the rest of the marketing year going forward and soybean demand going onward. Anything you'd want to add to that, Isaac?
Well, I would say that on beans, certainly, we've had it in the back of the head that it's going to be very tight all year long, but it seems like guys are working on that last 10% for 6 months. Obviously on a local perspective, basis has continued to fade as grower movement comes to town. So, I mean, the inverse that we're still seeing in beans is working. It's bringing beans to town. So, from a cash market perspective, despite lower stocks, we are continuing to see things fade and more than likely continue to fade going forward.
We'll get into the numbers part of the presentation here to wind us up here, but I don't want to labor on this too long. I want to mention that this second column from the right is the corn with the new acreage numbers, the corn balance sheet with the new acreage numbers included, but demand unchanged, okay? And that's a futile exercise, but I think it's important to look at where this would put us if demand was unchanged. Again, a futile exercise. That's why I include this column here on the right. And I really kind of just took a quick look at slight increase in ethanol demand here. Did a lower yield here. This is going to be your main sticking point as we go into the July 12 WASDE. I lowered it. Rudimentary yield change. I think that July precip will determine our national yield. So I'm only making a slight change there. This is not an opinion. It's just to kind of show an example of where we're at from a stocks to use perspective. When you increase 2 million acres of corn in this balance sheet, you're kind of give or take it still remains just in general a relatively loose balance sheet in corn. And versus where we were in prior years back here, again, this is all sourced from the USDA. Relatively tight, forgive my art there, balance sheet back in 22-23 loosens up here pretty dramatically with demand destruction we've seen recently and a stronger production after today's report.
Yeah, and the last time we saw carryouts in the 2+ billion bushel number, it was corn in the 4s, which I believe USDA's are projecting that. But it does seem like the sun continues to set on what we've enjoyed as far as high corn prices are concerned. If yield does come to fruition, I think there's a lot of momentum out there in the marketplace for, let's just say the funds that want to probably drive this thing lower, but they kind of got spooked out at the end of May and into this June rally on drought. But if rains continue to materialize, and that carryout number starts to become more of a sure thing, I don't think any of us are going to be surprised if we continue to fade lower on corn futures.
Over on the soybean end of the balance sheet, I think it's important to realize what a 4 million acre reduction could potentially do to the demand base here in the U.S. Previously in the last marketing year, you had a soybean demand base that held in there relative to corn. We saw corn exports drop off pretty dramatically with the high price situations over the last few years. You look at soybean acreage here going forward, and I did kind of do some rudimentary trimming of the export number here. Again, the far right's going to include some demand changes with a 50 million bushel reduction here. Again, throwing some darts at the wall, but really wanted to trim up some of that demand and see where it puts us from a balance sheet perspective. So you can make this acreage revision, this lower production work if you do trim some of the demand. Now, it's important to realize I left yield alone here, and if you revise that by 1 bushel per acre nationally, you do come in with a 3.7, 3.6. We cut that by a pretty dramatic amount. You're at a 3.6, 3.7% carryout to use. So there's far less weather premium, and there has been all along, Isaac. There's been far less weather premium in the soybean balance sheet than there has been for corn, and I think that continues to be the case here as we look at acreage being chopped out of this already tight soybean balance sheet.
Yeah, and that's obviously more of an August crop, right? Your corn pollination in late July, but your beans are made in August. So there's still potential in all this bean thing. I think, like we touched base before we got on the call here, I think it's important to look though at beans on a world carryout level. You're taking 200 million bushels of beans out of the U.S. number. If you leave everything else the same, we're still staring at world stocks that are about 15 million metric tons higher than they were the prior year, which is about a 15% increase over the prior year and the year before that. So, we can be relatively tight in the U.S., but the rest of the world can be, relatively okay. So,
it's a great point. Yeah.
With any rally, right, you got to temper expectations and say, okay, well, is this a pricing opportunity, or is this, time to hang on for the ride higher? So, both corn and beans demand is going to continually be the word out there. They're going to use that to beat the market up whenever they can. So whenever it looks like we're too high priced in the world market, which we have been on both corn and beans, they're going to beat that drum and try to work this thing lower when they can. But yeah, I think for the time being on beans, it's not going to be the case. At least not today anyway, right?
Yeah, certainly could be an interesting reaction to this report as we go through the rest of the summer. But I think it is important to look at a strong Brazilian soybean crop this year, a relatively lackluster Argentina crop, leaving us with a world carryout to use that, there's still some to go around there. And so world demand situations like Chinese demand continue to be a talking point, a little bit of a question mark as we go through the rest of this marketing year. So with that, that's what I have. You had a couple current events.
Yeah. So as far as current events are going here, July 10th. So that'd be not next week, Monday, but the following week. We do have marketing seminars. We're going to have PJ back for those. We're going to have I believe 9 a.m. in Sheldon at the Crossroads Event Center, and I believe 2 p.m. at the Bridges in Beersford. We did send out mailers on that and RSVP. So if you're interested in attending, please call Caitlin here back in the main office. Always look forward to meeting and visiting with you guys whenever you can make it out. So, and here over the course of the month of July, I don't have the exact dates, all the FCS golf outings are being hosted. Several of those events, so check those. I believe they're all listed on the website too. PJ, as always, appreciate you having on, and thanks guys for watching. Until next time.